Let's talk about La Tesla. So today, the stock happened to be up 8%, and there was some particularly big news around the company. They've announced another stock split, and this one is an unconventional stock split. This is going to come in the form of a stock dividend, and I'll tell you exactly what that is. Being that dividends are doing so well on this channel and now account for like 40% of my views, I'm going to continue to talk a lot more about dividends. And this is an unconventional split that's going to come in the form of a stock dividend. So let's dive into it. So Tesla wants to split its stock so that it can pay a stock dividend and the shares gain today, according to the CNBC article. The SEC filing said the electric car maker will ask at its annual shareholders meeting for an increase in the number of authorized shares of common stock in order to enable a stock split of the company's common stock in the form of a stock dividend. Tesla last split in August 2020. The shares have more than doubled since the 5-for-1 split took effect on August 31st, 2020. And that's done phenomenally, just like Apple and Amazon and Google have also announced splits too. So a lot of exciting splits that have happened in the past and that are coming up too. So, and I've shown you before with Apple how well stock splits can impact your overall net worth in the stock. But with this, so they're actually looking to pay a stock dividend to shareholders, meaning if you already hold one share of the stock, you'll get 5, and it's supposed to be like an immediate payout, according to this article. SEC said the electric car maker will ask at its annual shareholders meeting for an increase in the number of authorized shares of common stock in order to enable a stock split of the company's common stock in the form of a stock dividend. Stock dividend is a dividend paid to shareholders in the form of additional company shares instead of cash. These dividends do not affect the value of a company, but they dilute its share price. So in other words, if there's a 6-for-1 split, investors will get a stock dividend of 5 shares for every 1 share of Tesla they own. This would be a one-time event only. And they were up more than 6%. Actually, they were up 8% at the close. So this would be like a one-time stock dividend, not necessarily your typical split. And then let's go to one of my favorite sites, stocksplithistory.com. There's only one other stock split that's come from Tesla, like I said, August 31st, 2020. And like I said, it's done phenomenally since there. And this is a stock I've completely missed the boat on. I've only made $200 off of Tesla during my whole time as an investor, and that was on one options trade. And I was lucky to do that because that was a risky one. I closed it out like the same day. But what I want to show you here, again, going back to like what I covered with Apple and what I illustrated could be possible with Amazon, you see this chart here in the middle of the page. And let's see here. Let me try to zoom in so you can see it better. So the growth of $10,000 without dividends reinvested. Well, it doesn't pay a dividend, so not yet. So this doesn't matter here. So if you bought this stock, this is going to make a lot of people feel really good, including me. But I've been following this, and I was always too cautious to get into Tesla because it was such a volatile stock. I remember when it was $20 a share, and I'm looking back like, why didn't I buy a boatload of this? But if you bought this March 29th of 2012, 10 years ago, it was $7.47 a share. Not quite a 747 jet, but only 747 a share. And it ended today at 1,091.84. That's almost a 15,000% total return. Average annual total return, 64.6%. Do you think this beats a checking account or a money market? I would say so. It even beats inflation, 64%. It's like an 8-fold alpha over inflation. So that's phenomenal. So you would have had $1.461,811.14 under this scenario. And as in any video on this channel, I try to include some spreadsheet analysis. So let's go into that now. So I did a quick crunching of some numbers here with Tesla. So the last 5-for-1 split, August 31st, the pre-split price was $2,213. And it split 5-for-1. So the post-split price was $442.60. So from there, it's gone up to $1,091.84, which is like a 60% gain, I believe. I'll do that real quick here. See, one of the many value adds of this channel, math on the fly. So yeah, that's actually the percent gain there, 147% from the post-split price. And then if you times that by 5, this is what the original share would have been. So $2,213 to $5,459. Now, if you take that example that I showed in the chart of $10,000 invested at $7.47 a share, this was March 29th of 2012, 10 years ago. So this would have bought 1,338 shares and change. And then if it splits 5 for 1 again, so here's the example of 1.46 million that it would have grown to, the investment of $10,000. But if it splits 5 for 1 and it gets back to that price, if it gets back to, yeah, the price that it's at today, then that 1.46 million becomes 7.3 million. So you see the enhanced value of the splits over time. This is a key concept. If you can really master this, you'll put a lot more money in your pocket. So, and then the hypothetical that they mentioned in the CNBC articles was actually 6 for 1. So let's do that math. So boom, that's 8.8 million almost, which is phenomenal. And you see, if you've been following my channel, I illustrate the similar examples with Apple, the infamous $800 million example that I went over. And then Amazon, I've illustrated the potential with this too. And then Tesla down here. So I've got a whole spreadsheet going. Every split, I'm just going to keep adding. I'll probably add Google in next so I can do some analysis on that. Let's see here. What else do I want to cover? So yeah, I had a different video planned today, but again, this dominated the news today, so I was going to do this. I thought to do this. That's not what I want to cover. These were other video topics I had up here. So yeah, this would really be cool if they actually do this in the form of like a stock dividend, like a one-time event. And that's really all I wanted to cover. So hope you found that useful. If you like that, please remember to like, comment, and subscribe. And if you can't afford the Tesla stock, there's always options on Tesla, which can be quite risky, as we know, because the stock is particularly volatile. Let's just look real quick here as some bonus content. We'll just look at the options chain. So you can see Tesla going back to 2019 was at $45 a share in September 2019, and it's shot all the way up to where it is today, which is, you know, phenomenal. But just real quick, let's look at the options just for some bonus content. Wow, look at Amazon rolling. I just saw it in the corner there. Almost $3,400. Dang, that $2,600 price is looking really good now. So let's look at, if you were going to consider an options, you could consider a leap option, January 19th, 2024, almost 2 years out. Let's see what these are priced at. So if you were going to wager on Tesla going up to, say, $2,000, this leap option would cost you $168. Still kind of expensive, but not as expensive as buying the stock. And that's just for one contract. So remember that. That would be an expensive trade. But let's go in the more short term here. Let's look at June. Scroll down here. Yeah, I did that one option on Tesla and I got out of it like within a day or two because it was one I should not have been in, but I was able to get out of it for a profit. Okay, let's see. Let's look at $2,000. See how some of these are priced so much higher than others? That's because of implied volatility, I believe. 2,000. Let's just see. Huh, this one's cheap. But anyway, I mean, that's something you could look into if you wanted. So anyway, with that, please remember to like, comment, and subscribe, and take care, and keep an eye out for my next video, which should be out Wednesday. Have a good night.